Eric Mother with Mother.com with the second video of the day. Let's take a look at the markets here. I still believe and I think the market is still poised to go higher short term for a swing trade, and I gave you the reason based on the VIX hourly. So let's take a look at some ideas. We're going to take a look here at UNG, which as of right now is breaking down below the previous recent monthly closing low of 13.67, and as long as that's the case, I think this one is a short. You can see here we are getting very close to moving below 30.9, and if we do, even right now, I think this is a short trade because it is already breaking below the previous lows. Again, monthly RSI is bearish, and we can see that yes, not any of our MACDs are at 3-year lows, so it's not the best, but I'm gonna go this one. I'm just gonna give it the benefit of the doubt. If it continues holding below 13.67, so let me just, so below 13.67, this thing is breaking down, and you can take a trade there with the idea that it sees lower prices. Obviously, if it jumps back above 13.37, then you need to close that position, but that's the way I would play it. The other stock that you can go long is the inverse, 2 times inverse, the UNG, and it is KOLD, and it needs to break out here to confirm strength, but I think you can take the trade right now. The reason I say that is because we already see that the natural gas is breaking down already. So whoops, 87.37 is the trigger price for a confirmed breakout, and it is just 1 penny above that, so we'll take that. So this one is a buy right now, right here, right now. Targets would be somewhere here in the 120s, 110s, 130s, depending on how things go. I know that's fantastic to say that, but I also say that because you can see here that the RSI has a chance of breaking out to 3-year highs, all-time highs, and also the chance of moving above 61.8 for the first time ever. So that's why the price target is around this level here, 110s, 120s, 130s, 100. We also see that the MACDs are at 3-year highs, or you can do it that way, and also 3-year highs on the MACD. So this one meets the minimum requirement. You can go short natural gas as long as it is below 13.67. The problem with this KOLD instrument is, and you never hear me talking about volume because I don't consider volume, but it has a slightly low average daily volume of about 44,000. It's a little bit on the puny side, so we're gonna go with the next idea in the name, in the sector. The problem, it is 3 times short natural gas. It is DGAZ. Very tough to time this one. This one is a buy right here because KOLD is breaking down. So if it can also jump to 3-year highs, it's gonna be an all-time high moving observation there. The buy point on this one for confirmation of a breakout is gonna be at 8.15. I say you buy it before the breakout because KOLD and UNG are already moving above their threshold. So this one is a buy, currently here at 7.81. Price target is gonna be in the mid-teens in the coming months if it can continue in that direction. MACDs look good as both MACDs are trading at all-time highs, and one of the MACDs is moving above 0 for the first time ever. So yes, this is a volatile trade because of the way it moves. 3 times natural gas. Natural gas is very volatile, so you have to make sure you have a stop somewhere to protect yourself, but I think they look great in my opinion, and we'll see what happens. The other one is FWM, if I can type it right. Maybe it's the other F. Whoa. Well, hold on. Yeah, FWM. Whoops. Now I like this one because we see the possibility of breaking out to all-time highs on the weekly RSI here. It is moving above this range. We also see the possibility of crossing over the 13-week moving average, crossing over the 34-week moving average. This one is a nice hold for a couple of months if the market stays healthy. I'm looking at the daily because this is the most recent daily, where after recording that daily closing high, it's been trading sideways in this period here. So I believe that as long as it is above 5.94, actually earlier it was trading higher, so maybe a little bit of a problem here. But if you want to buy this, it needs to be above 5.94, otherwise ignore it. Ignore if it's below this. If it moves above 5.94, it's a buy, with the possibility of moving it to the let's call it 8s, 9s in the coming months. But it needs to be above 5.94 if it's gonna be in play. The other one is a Chinese name, and WUBA. Take a look at the monthly. The monthly is breaking out above this recent monthly closing high. So if the stock can hold above 48.79, I think it can be a good addition to a portfolio. RSI is at all-time highs, and we see that the MACD is not matured enough because of it IPO'd late 2013. Take a look at the weekly. I think the weekly is fine in my opinion. I don't see anything wrong here. It's not the greatest, but it is also moving out of a range. I would still play it if it can hold that breakout level. Is it the best chart ever? No. But you can own it as long as it's holding above that 48.79 level. Alright, let's take a look at the last idea. Actually, not the last idea, but yeah, the last idea in terms of a single stock, CYBR. And I was looking at this from a potential rebound, and we're seeing here the markets continue to seem like they want to go down, and I am not yet changing my opinion until the hourly on the VIX tells me otherwise. I still believe the market is poised to go higher based on the daily charts also. So CYBR had a nice run, let's call it from 32 all the way here. Nice run, and it's since pulled back, of course, consolidating. I think the fact that it is holding, let me draw this correctly, finding support here, weaving itself potentially back above that line. Remember, the last time it moved above this on the weekly was here for a nice move. It's showing some type of support here. I like this one for a bounce if the market is going to move higher. As you can see right now, we are in this range. I think that eventually this, if the market stays stable, this one moves higher. So if you're trying to find something that is not at highs and is actually at a pullback level, take a look at CYBR right here at about 51.73. Right here, with a buy, with a stop about 5%, or let's call it 8% from your purchase price. So this one is a rebound candidate. I believe it can do well for you if it can more so move up above this wedge, because it still looks good in my opinion based on the chart here. We can see that the breakout took place here, and draw a simple straight line which is around the 50. If it can continue bouncing back above the 50, this one should be a nice rebound candidate. You'd also like it to move above this wedge on the daily. We're also looking at, let's take a look at Biotech. I know Biotech has been down recently, but if you take a look at the daily chart for right now, a couple of things. It held the 50 there, and we also see that it held this support line. So Biotech is right now showing signs of life, and we see that the entry point on the way up began during this lows, which is this RSI level. This move generated enough energy to bring it all the way here. So we know that the RSI level there is what to look for I would draw it something like that. And since then, since this move here, this has been where you needed to go along the biotech space. And so for now, it's come close to that level and held. So I believe that confluence of those two lines showing support is one other reason why I think that the market is not as negative as it might seem. So those ideas are long side ideas. The UNG play is a short idea on natural gas. We'll see which way it goes. Eric Mwade, good luck, peace, and blessings. Woo!